week. So we will discuss all of this with the investment committee. Joining me for the hour today, Joe Terranova, Jenny Harrington, Jim Lebenthal, Josh Brown. Let's check the markets. It has been a bit of a struggle for risk lately, but we have had a nice little turn in stocks here at noon in the East. So we're a little mixed. We're still searching for something today. But we're on back-to-back losing weeks, Joe, for the S&P. Gold, silver, and Bitcoin are all lower. Nasdaq's down, as I said, 5 straight weeks, longest streak since May of 2022. Where does this leave us as we start a new week?
I think it leaves us where we were at the beginning of the year, anticipating an environment that was going to be more volatile underneath the surface, and the need to really be a little bit more tactical and look for opportunities in what was unappealing areas of the market, whether that's geographically or by sector. And I think that's in fact what you're doing. Now, you have some carnage in some of the highly speculative areas of the market, obviously software being one of them. I do not believe that in totality, the entirety of the software industry is going to re-rate its multiple to a level that it's unattractive. You'll find
it's on its way to doing that.
You're going to find some winners on the other side. You have to allow this process that's going on right now currently, where I think the marketplace environment is kind of looking towards risk and saying, okay, we want to take down leverage. So I just think that continues. I don't think you get too high. I don't think you get too low about what's going on right now. We're kind of spinning to a lot of different places and ultimately ending up in the same spot. And I think that's the environment now for the next several weeks.
Yeah, Jenny, there are differing views as to whether this spinning around, this volatility that's been introduced here, especially around tech, draws these stocks into some form of broader correction from where they've already gotten. I mean, yes, software sucks a lot of air out of the room. Down 23% year to date. The Mag 7s collectively, the Mags, are down 7.5%. So what do you make of that?
Well, it's so hard to figure out. Is it going to trigger something and we have the whole market down 10 or 15 or 20%? Or is it going to be this really intensive rotation? And through the rotation, the broad market ends up kind of flat where it is. But within that, you have more of what we've had so far, where you've got like value up 7-ish, growth down 3-ish, energy up 20-ish.
When that space might stabilize, joining me for the hour, Joe Terranova, Carrie Firestone, Liz Thomas, Jason Snipe. Let's check the markets. I'll show you what I'm talking about. The Nasdaq's up more than 1%. Haven't been able to say that all that much lately, but Joe, we are today. I'm wondering if maybe this is the start of a turn. Nvidia's up 2.5%. The IGV was up 2% last I checked. Looks a little different.
So I think every turn begins with stabilization. I think that's what happened. I think you had some stabilization yesterday in a lot of the software names. We saw some of the private software companies releasing their earnings to give some comfort. Then you have some follow through today. Excellent earnings from Cadence Design. That gives you a little bit of insight as it relates to how the AI disruption is actually affecting some of these software companies in real earnings. And it's broad. It's not just software that's powering us higher today. Obviously, industrial production, housing starts really strong. So that lent itself to some of the energy names performing well, some of the economy names. But back to technology, you still have names in the technology space that are working well. Analog Devices, Micron, Ciena, Keys, and onsemi, all 52-week highs today.
The point you're making in part by not saying it is outside the mega caps. Right? You're seeing some stories develop outside the mega caps. The question is, Jason Snipe, whether 1 week from today is the whole key.
Yeah.
Especially for the mega caps, and that's NVIDIA.
Right.
Reporting its earnings 1 week from today. Barclays today with the masters of the obvious statement. NVIDIA, sorry, but it's true. I mean, NVIDIA, here's what they say. This is deep, so pay attention. NVIDIA could make or break big tech's so far mediocre season.
Wow,
never heard it before.
You go, Barclays. You go.
So, couple things with NVIDIA. Obviously, today was the announcement of the Meta deal, $50 billion deal, multi-year deal. I think NVIDIA obviously hasn't done much over the last 6 months, only up 4%, up 2% roughly year to date, but it's bouncing today. And I think part of it is obviously this Meta deal, but I think a lot of the talk for me or kind of the digest, and I have kind of with our analysis is, there's a
of the U.S. consumer. The investment committee is standing by to help navigate through all of that. So joining me for the hour are Joe Terranova, Stephanie Link, Malcolm Etheridge, and Bryn Talkington. So let's get a quick check on the markets right now overall. Predominantly a down day, fractionally so, roughly 0.5% declines across the major indices. The Russell 2000 down about 0.25% on the day so far. If you talk about the way that things are developing right now, there has been this debate about whether or not this is a risk on, risk off, risk aversion type trade, or is this just one that's a rotation? And maybe that's where we'll start the conversation off today. Maybe with you, Joe. Is this in your mind? We've talked about it a lot over several weeks now. Is this a market that feels heavy to you, or one that just feels like it's cycling through and reallocating away from certain parts of the market into others?
Yeah, Dom, and great to have you here with us today. I think it's more rotational volatility than exit volatility, where everyone's looking for, the move to the sidelines and looking towards cash. With that said, though, the market does appear to be spinning and ultimately ending back up in the same place. I think where we are today is maybe a moment to kind of sit on your hands a little bit, assess the portfolio. If you don't have the exposure to energy, what are you waiting for? We've been talking about that now for the better part of the last 4 months. Get some exposure to energy. It's not just about the headlines that we see with Iran. It is the fact that energy is actually seeing the earnings growth and the delivering in that regard. So I think this environment that we're in is going to continue in the near term. There's a lot of conflicting signals, and it seems as though the story in 2026 is really about, underneath the surface, the elevated volatility relative to what we've been used to the last couple of years.
Stephanie, if there are that many mixed signals in the marketplace right now, it almost begs the question, is it the status quo going forward? Because the status quo has been a slow grind higher, not an exponential move or a parabolic move for the markets, maybe certain parts. But if there are that many conflicting moves happening and signs in the marketplace, do we just keep that slow, steady grind higher, or do you expect a churn for quite some time?
Tariffs, as you know by now, a long-awaited ruling that does have markets reacting. We're trading all of that, of course, with the investment committee. Joining me for the hour today, Kevin Simpson, Bill Baruch, Jim Lebenthal, and Josh Brown. We'll go to the markets here, where I think we're still trying to digest this ruling. It is the Nasdaq that's having the best day of it today, but we are green across the board, except for the Russell, which we will call flat. But the headline is, as you know, 6-3, the court striking down the Trump tariffs. In terms of markets, discretionary, interesting to watch, as we've been talking about for the last few hours. Industrials also. We'll go right to Eamon Javers here at the White House, as we're still waiting for I think a larger reaction from not only the president, Eamon, but the administration at large, and what you may be hearing from your vantage point there.
Scott, we're about to get that reaction. Caroline Leavitt, the White House press secretary, just posting on social media within the past 30 seconds or so that President Trump will hold a press briefing on the Supreme Court's tariff decision at 12:45 p.m. Eastern time. So she's saying that the president will speak directly to the press at the White House in about 45 minutes time about this and offer his first on-camera reaction to it. We do know that behind closed doors this morning, he called the Supreme Court's sweeping 6-3 decision against his tariff authority under that law, IEEPA, disgraceful. The president has said that this was one of the most important authorities that he wielded as president because it gave him tremendous negotiating leverage with countries around the world. But the Supreme Court this morning has struck that authority down. The Supreme Court putting this in historic context, Scott. And I want to read you from the opinion of the court from Justice Roberts, who said, Article 1, Section 8 of the Constitution sets forth the power of the legislative branch, and in that power, the first clause is that Congress shall have the power to lay and collect taxes, duties, imposts, and excises. Roberts says it's no accident that this power appears first. And then he says, what common sense suggests, congressional practice confirms. When Congress has delegated its tariff powers, it has done so in explicit terms and subject to strict limits. What Justice Roberts is saying here, the Chief Justice of the Supreme Court,